if they're only 40, if 200 something became public, the odds of all those making money by profitable products is very low. And second, the odds of them selling themselves to the bigger pharma companies is also low, because the pharma companies are just, they also know about 40 drugs getting approved. So they're not going to buy that many. So in other words,
exactly,
you had 50 people showing up for a boat ride, and the boat could only sit 10 people. It was something like that. $1 billion or $1.3 billion or $2.8 billion, whatever number you use, the cost to bring a new substance, new compound through drug discovery, through clinical trials onto the market is huge. And until recently, it's been working pretty well. Shifting to biotech specifically, the XBI, the S&P 500, S&P Biotech Index, I should say, rose 250% from its 2016 lows to its 2021 highs. But since then, the party has ended quickly. The XBI is down 30% year to date, and it's down 40% in the trailing 12 months. We're in the middle of a biotech winter. These firms struggle to get capital. The investors are bleeding. So what should you do? Is it time to back up the truck and buy a lot of these beaten down biotechs? Or is it best just to steer clear? I don't have all the answers, but as usual here at the Early Advantage, I brought someone who does, or at least who may. His name is Leon Juntong, and he is the founder of In Science We Trust Consulting and a former Wall Street biotech analyst. Leon, thanks for joining us today.
Thank you, James, for the very generous introduction. So first disclaimer, my advice, or I wouldn't say advice, my comments are just my personal opinion. Please do not use this for your personal investment directly. Should always consult expert and be aware the risk of investment, particularly in biotech. With that being said, I'm very happy to be here to share some of the, I would say, mistakes or observations I have seen in the past, I would say, probably 5-6 years since I started doing biotech investment, business development or transaction right now, consulting. Hopefully that gave the audience a little bit basic understanding how the industry works. What's I would say, hopefully, the guiding principles for professional investors really evaluate either private or public companies, or either short-term or long-term. Hopefully that's what I could deliver today with my good friend James together.
I have faith in you, Leon, especially because we're wearing the same kind of shirts.
I know.
The generic blue dress shirt. We were talking before we started recording that, ironically, the biggest factor affecting biotech these days has nothing to do with biotech. It's interest rates.
Correct.
And and I know, if anyone who's seen a discounted cash flow valuation model knows that you project all these cash flows and then you project a discount rate. In other words, $1 today is not worth $1 in the future, is worth some amount less.
Correct.
Or if I want to make you indifferent to $1 and something more than $1, I'd have to promise you a bit more in the future, right? The same thing. It's a discount rate, basically. Anyway, when the Fed raises rates, or when the Bank of England raises rates, or when the European Central Bank raises rates, it's all the same thing. Those future cash flows become worth less, and that's true of all companies. But if you're a utility company, supplying electricity or water or sewage, your cash flows are kind of like this, and they go a little bit in the future. If you're a biotech company, your cash flows may not be projected to come for many, many years. Your windfall's way into the future. So the kind of the physics of those discount rate raises disproportionately affects growth companies, and especially biotech companies. So mathematically, it's not like the industry has done anything wrong per se. It's no surprise that it's been hammered. So by virtue of that logic, is there a point when the U.S. Federal Reserve, for example, said it's going to keep raising rates, so far, but it kind of we see some signs that things are going to crest. Should investors be getting ready to buy? Because once those rates stop rising and maybe even start going down, then we're going to have a reversal, or should they not?
It's a very good question. I think that's not even $1 billion, probably $10 billion question right now for the XBI, the biotech index. By the way, there's 2 index for biotech. if you really look at the growth biotech, you probably want to look at XBI. I think that they weight more with the small mid-cap biotech. Exactly like James said, the especially small mid-cap biotech, which typically expect to have a cash flow, let's say have some revenue 5 or 10 years from now. I think that's our average. They're really at the mercy of a tiny bitty movement of the interest rate. That's for sure. So that's why when James said like the terminal rate of Fed could be peak very soon, would that be a good time to buy? From this dimension, you may say yes, but unfortunately, this is a little bit more complicated than what people think. Like I said in the very beginning, biotech properties, especially small medium biotech, it's a sector you want to leave it to specialists. The reason to say that, because it's not just interest rate. There's a lot of other stuff. Give you just a few examples. Probably two factors to consider for now. Number one is what is the initial valuation when those biotech went public. So as a lot of people probably didn't know, but you could already expect in the past 2 years when the capital was so cheap, a lot of biotech companies, actually I would argue a lot of disqualified biotech companies went public. And when those companies went public, their valuation was unreasonably high. So they started with something unreasonably high, did not get a strong support by their fundamentals. So their downside was reasonable, let's put it this way. So that's why I said the interest rate is not the only factor. That's actually a huge factor. For example, to further support that point, typically, like I said, a biotech should be left to the specialist. But surprisingly, in the past 2 years, a lot of biotech went public are SPAC. That's crazy for our specialists because you get a very little information when a company went public via SPAC.
And a SPAC is a special purpose acquisition corporation or company
Correct.
for someone who's new to this. Yeah, and the blank check basically. So a lot
Correct.
less, due diligence. These things just pop up on the market.
Correct. So I saw some spec that the biotech have only 40 pages of slides of PowerPoint, which is insane for us. Because as analysts, when we evaluate a company, this prospectus of biotech typically is like at least 150 to 200 pages.
So if it's 40 pages, they're hoping the uninformed retail investors read this and get excited and buy, right? Selling to the dumb money, basically.
Pretty much. That's a lot of spec, unfortunately, did that. So, there's free money, right? The past 2 years. So why not? So a lot of people, like I said, disqualified company went public. So that's a really huge factor. Still, a lot of people, some conservative specialists believe the XBI still have room to go down because they said a lot of a bad company has not been weighed out yet. And you already saw the trend. A lot of them actually did go belly up, and there's a lot of a surviving strategy. Some of them do reverse merge. Some of them, obviously private equity won't take them private. So that's number one. Number two, for biotech, just give you one example. The number, I'm a number guy, right? By the way, I always said, one of the motto of my my company is like in data we trust. I really trust data way more than sentiment. To give you one example, so FDA every year approve about 40 drugs, new drugs. That's where the biotech really aim for, right? Get a drug approved. That's a story. Finally, how many biotech they went public in the past couple of years? 200. Think about it. That doesn't make sense. That means the majority of them gonna fail. So another thing is there's a second factor: how biotech really return to the investor. Majority of them never sold their drug to the market. At some point, the biotech get acquired by large corporations such as Merck, Pfizer, Novartis, Roche, you name it. That's majority of a biotech get exit, even as a public company. Now, biopharma, they have been here for more than 100 years, a lot of them. They know their numbers. They know there's only 40, drugs get approved by the FDA, more or less, per year. That means probably, some of the drug they can develop internally. That means they're going to buy absolutely less than 40 biotech per year, right? Now you say the math doesn't add up, right? There's another, the best case scenario, 160 biotech who went public, let's say last year, let's assume, will never have a chance to see the light, right? So then that's another reason. It's not like people think the interest rate is its only factor. There's a lot of factors, and also, by the
And we
way,
could have seen that second factor just by literally looking at the numbers. If 40 drugs per year on average are getting improved in the U.S., and I know we're talking about the U.S., but it
yeah,
is kind of the hotbed of biotech. So
correct,
wherever you are in the world, if you're investing in biotech, you probably are investing in U.S. traded
correct.
biotechs. Not guaranteed, but very likely. If they're only 40, if 200 something became public, the odds of all those
Hmm.
making money by profitable products is very low. And
Yeah,
second, the odds of them selling themselves to the bigger pharma companies is also low because the pharma companies are they also know about 40 drugs getting approved. So they're not going to
correct,
buy that many. So in other words,
exactly.
you had 30, you had 50 people showing up for a boat ride and the boat could only sit 10 people. It was something like
Correct.
that.
Correct. So, by the way, what I said, 200 public biotech is not the total number. I think the total number right now is approaching 1,000. So I'm just saying like additional new
Yeah, yeah. Per
biotech
in
went
the
public.
past few years. Yes,
Yeah,
yes.
yeah. So you can say this like a cheap money, the US government, the Fed, or whoever printed those cheap money really disrupt the market. But of course, there's a lot of opportunities, right? Try to take a ride. Honestly, a lot of biotech who went public in the past 2 years, I think the people knew, especially those biotech led by veterans, they knew very well. They're just gaming the system. I think a lot of them already cash out, unfortunately. And a lot of the retail investors just had this hot potato in their hand that they have no idea how to do with it. So, my opinion, I gonna just very cautious to wait. And again, you are play against some of the most educated, sophisticated investor like hedge fund people. And this is, by the way, is not GameStop. You cannot easily get a bunch of a kind of a retail investor together, and you can, let's say, have a good fight with the hedge fund managers. This is a little bit different. This is my cautious, I would say, suggestion to people who are interested in this.
Yeah, you can't sort of use momentum to crowd momentum to push this up
Mhm.
because you got real data coming out and you got data
Correct.
events.
Correct.
All right, so in a way, you've quickly answered the question I teed up at the start of the show, which is,
Mm.
should people be trying to jump in and pounce? And your basic answer is no. It sounds like for the average person, you would find a biotech fund manager to do that. Uh,
Yeah.
Even for those, it sounds like you're generally bearish on the sector. It sounds like you think there's more to fall, or at least more risk in the sector than potential returns right now. Is that accurate?
I don't know whether it's gonna go up or go down. Again, there's right now the two major factor for biotech right now. It's not really fundamental. Fundamental is so unclear, right? I just listed those, and this only qualitative suggestion, right? You really have to crack the number, and there are gonna be tons of assumptions, and those assumptions cannot be accurate. So pretty much right now, we have a ruler have a pretty bad accuracy. You ask me to give you users ruler to give you accurate number, that's just impossible. That's pretty much the situation right now. The several factors obviously already mentioned that the macro is very important. That's one, the interest rate or some how people think about this. Another thing a lot of people didn't realize, the U.S. equity market is not isolated. They are tightly connected with other equity markets, such as like Hong Kong, Singapore, or like Japan, Europe. Unfortunately, right now, a lot of biotech, especially small medium biotech analysts this year, they also kind of throw their hands because what they did doesn't really matter much, especially with those like biotech with market cap lower than, I would say, 200 million US dollars. They are mainly on the mercy of the macro. So, for example, your audience probably heard about that. There was a rumor said like China probably gonna ease their zero COVID policy. Guess what happened? The Hong Kong
Yeah.
stock market and Shanghai just shoot up. However, on the other hand, there's a lot of mainstream media from the West that really portray a really gloomy picture after the Chinese Communist Party had this like a 20th really important conference. They said, wow, that's the end of the day, that's a dictatorship, this guy gonna become emperor. You know, a lot of people actually get pretty confused because from economic point of view, after the conference, the Chinese government will start really, really get to do the work because they remove this huge political risk, right? Their economy likely going to rebound. But the people saw a lot of foreign capital, especially foreign investor, flee from the Hong Kong stock market because of this kind of media coverage. So it's very interesting. Like I said, this make like a fundamental analyst really scratch their head real hard because right now the sentiment, sometimes I would call it irrational sentiment, uh, take a too much impact on the decision making of professional investors.
Yeah, I mean, and you may be more optimistic than I am on China writ large. I mean, I did business with China for 10 years.
Mm-hmm.
I will agree. I will agree that the mainstream media often mischaracterizes and misunderstands a lot of
Mm-hmm.
what's going on there. Now that said, the Chinese media is usually much worse. If
Yeah,
you want to
yeah.
learn
I
about
mean,
what's going on in China, don't
yeah.
read the Chinese media because you're
No.
not going to get the honest answer. At least about anything
No.
bad, about like
Yeah.
small stuff that they have no incentive to be biased about. It's
Mm.
totally fine. But so it is, and that's one of the challenges of China. There's an
Correct.
article in Foreign Policy. I forgot who wrote it, but it was something like even the Chinese don't really understand China. And the guy's
Correct.
point was that, which is it's just so hard to get accurate data. But it sounds like you're more optimistic than the mainstream media. But let me ask you this now, going back to biotech, if you were one of those professional fund managers and you
Mm-hmm.
had to invest right now,
Mm-hmm.
I mean, how would you look at China? Because I know that's an area you're particularly familiar with. China has
Mm-hmm.
been beaten down. Do you think it has potential? The Chinese medical space overall, U.S.
Mm-hmm.
spends almost 20% of GDP
Yeah.
on healthcare. It's huge, right? China
It's
is what
yeah.
up to 7 or 8% now, something like that.
Pretty much, yeah, something like that.
Yeah, and embarrassingly, Chinese life expectancy is right around the same or just past the U.S., which is embarrassing for the U.S. It's wonderful for the Chinese. I'm very
Mm-hmm.
happy about that part. But given the amount of money that's spent in the West and in the U.S. on healthcare, that is kind of embarrassing. So, how bullish are you in China first, and then I want to know within biotech, and we can get to this in a moment. But like, what are the areas that you think are less crazy that you would be more likely to think there are long-term winners in,
Mm-hmm.
whether that's CAR T, whether that's
Mm-hmm.
IO writ large, Alzheimer's, tumor microenvironment. I mean, there's all kinds of things, and they get
Yeah,
hot and they
yeah,
get
yeah,
cold, and they get hot and they get
yeah.
cold. But let's go to China first, then we'll biotech specifically next.
Yeah. So to give you everyone one number, it's very interesting. Actually, I ask a lot of people. So it's a really good entry ticket if you want to torture your so-called China equity specialist. Chinese GDP have grown, I don't know, probably 20 times in the past 30, 40 years, I'm guessing, more or less in that neighborhood. And Shanghai Stock Exchange created, I think, more than 20 years ago. But if you look at the let's say the equivalent of SP 500 from Shanghai stock market, they didn't increase much. It's way below the GDP increase of China.
Yep, yep.
So I guess for any investor into the China equity market, figure out that question first. Then you understand logic why the Chinese market was designed that way. It was by design, by the way. It's not an incident. So with that understanding, then you understand why a lot of investors really capture or benefit from the growth of China are not in public sector, they're in
Yeah.
private sector. They are venture capitalists, venture capital fund with tons of money. Just ask Sequoia China. The fund manager Sequoia China, I believe his name is Neil Shen, right? He was a founder of C-Trip. And he had been ranked as #1 VC in the world. I don't know, probably approaching to 10 times, meaning often several times in a row when China was really on the, on the good run. So that's where actually people did make a lot of money, but not in public market. So with that being said, I want to give people a little bit idea. And he made money because of the booming of the tech industry in China. Pretty much all the major big tech name when they were small, he was one of the first investor. So that's where he made money. Similarly, let me just address James' question about the healthcare. We already know that China actually per capita spend less than 1/20 of the expense in the US. Let's forget about outcome, everything. Let's first share with everyone what's the logic. China is I always treat China as the government as the how to say the executive team of a company, China as a whole, you treat it as a company, a lot of things actually, just my work model, right? Which probably rub a lot of people the wrong way, but I'm a capitalist, so I'm an investor. Sometimes whatever works for me, I treat it like this. So from their point of view, they treat healthcare as their call center. They have a mandate, right? The bureau or something tell them this is how much money you have. This is ceiling. That's how much you have. Your job is to use this fixed amount of money to improve public health of China as a whole as much as possible. Now go figure. Then what they did, they realized, the best way to really help China with a very limited resources is actually really focus on basics. So China, to a lot of Americans or probably Europeans, surprised, probably have the one of the highest coverage of basic healthcare. I think right now is approaching 98, around in the neighborhood 98% of Chinese have a healthcare coverage, which is insane. If you think about China just eradicated extreme poverty, I don't know, 2 or 3 years ago. But why are they doing that? Because the guy who's in charge of public health as a KPI was determined by how good the public health is going to be, not by how much money, how much tax he can let the healthcare industry really bring in. Then you understand why China, at some point really promote biosimilar. Then you understand why China, the PD-1, the miracle drug in the US costs $180,000 per patient per year. In China right now costs around $5,000 per patient per year. That's insanely cheap. That's an incentive. But of course, there's a kind of a, how to say, struggle between I would say the Chinese equivalent of HHS, right? Human Health Services, right? That's a US one in charge of CMS, everything. China has that. But there's also kind of an equivalent to the, I would say, in China, they have department development. I don't know what's the literal translation. They really try to promote the economy in China. They really, of course, want the healthcare, especially biotech, go up. But I guess their voice right now is not as strong as the first one, the Chinese version HHMS, because they are doing fantastic job, right? The boss, big boss, must be very happy with what they are doing because they use such little resources and achieve something so big. So I don't say this is going to change in the near future. So that's bad news, sounds like, for investor, but good news for the Chinese public and the population. However, there's one light, really budding opportunity for the innovative biotech or biopharma industry in China, which is I would say fast growth of commercial healthcare insurance industry. It's very interesting. Actually, we just had a conversation with some of the experts over there. Obviously, the Chinese government realized, right, if you do not reward the innovative biotech company by give them fair price of their innovative drugs, you're gonna kill innovation in the future, and that's not good, right? Then you're gonna be always behind, and and also Chinese government want those companies to go abroad, make some money. The investor, their shareholder also want to do the same. But if you don't give them money, which James rightly pointed out, it costs $2.4 billion. If they don't make money from their existing drug, they will never have money to develop a new drug, right? It's a dead end. So they want to use this commercial insurance, kind of tie the several interests together. One hand, by the way, Chinese doctor and the hospital are suffering. Oh man, they're really suffering. Their pay, their work hours pay so low, work hours so long, right? And the patient
And it's not
desperate.
uncommon that a doctor just for perspective, because I've been in a number of hospitals in China, doctors may have 150 patients to see in a day,
Correct.
and they're just jumping in, and people are elbowing in and shoving
Yeah,
their
yeah.
paperwork in front of the other person. And there's no way
X-ray
you
in
can
front
do
of
it.
you, 30 seconds,
Yeah.
tumor or no tumor, surgery or no surgery, 30 seconds, literally. It's insane. Wow. I mean,
Yeah.
that's
Yeah.
a price you pay.
And the
But that's
doctors are frustrated. The patients are I mean,
correct.
everybody's frustrated, basically.
Correct.
Yeah.
So obviously, people know there's probably 700 to 800 million middle class in China. They can afford, much more expensive, healthcare premium. But there's just no way, no opportunity. So obviously, there's a need from hospital, from doctor, from patients, also need from the drug companies, right? Obviously, in the long term, probably good for the shareholder as well as for the whole industry to really become competitive, and then they can become Roche and Novartis. I mean, Roche, Novartis, Sanofi, and GSK, AstraZeneca, how much money they are making from the U.S. healthcare system, right? Just those companies. I mean, obviously, nobody want to leave the money on the table. I mean, Japanese drug companies finally made it. Just looking at Daiichi Sankyo, right? They are doing fantastic because of their antibody drug conjugate, the best-in-class drug. I remember their peak sales with their in HER2, which is a miracle drug for breast cancer, would be 20 billion US dollars.
Hmm. Hmm.
Who want to leave that on the
Enormous.
table?
Yeah.
Enormous. Just one drug, by the way. So, but they take time, take money. You cannot just you do this. Your passion, your conviction doesn't help in this case, unfortunately. So I think that's a good thing. I think they realize that, but of course, like U.S., right? The U.S. is very funny. The PBM, pharmacy benefit manager, right now is under really really bad rap, right? So everyone hated them. Little known to most Americans, PBM actually saved the U.S. healthcare system, I would say 30, 40 years ago, because at that time they were as fragmented as China right now. Different, like a party have a different interest, and no one can put them together. And PBM can come along, solve all the problem, and this harmonize the whole system. That's why you have good system to promote innovation, but there's also some other stuff. But that's kind of one of the fundamental pieces for the U.S. healthcare to be so successful today. I mean, of course, you can argue right now it's not so successful, partially because of PBM, but that's a different story for a different day.
Yeah, I mean, look, there's no argument for me. I mean, U.S. healthcare is wasteful. It's exorbitantly expensive, but it's also made the U.S. the breadbasket of innovation for the world.
Correct.
If you want to
Correct.
develop something, you come to the U.S. because you got talent here, you got capital, or you used to. This is how you make the money. And so it sounds like China has potential, but so far a lot of the benefit, and I'm not saying this is a bad thing, but a lot of that benefit has been going to the patients.
Correct.
In kind of like a big national HMO model is what we would say in the U.S. Whereas
Correct.
in the U.S., the benefit is more likely to go to the entrepreneur and potentially
And
the
you and
investors.
your 401k and my 401k, by the way, it's really
Exactly.
supported by the healthcare public companies. A lot of people didn't
Exactly.
realize. Yeah.
So if somebody's watching this and says, I am a professional investor and I do want to gamble anyway on biotech, and I'm reading exciting headlines because we've got all kinds of medical progress has
Yeah.
been
Yeah.
exponential as far as mankind goes. We've made more
Yeah.
progress
Yeah.
probably in the past 10 or 15 years fighting cancer than in the past 100 before that, I would argue, with the rise of
Yeah.
immunotherapy, maybe. What do you think are some of the most exciting areas?
Yeah, I think in the past couple of years, they obviously if you're talking about oncology, I would name two I'm rather familiar. So I'm trained in actually immuno-oncology as a PhD. So I also work with one of the most influential nonprofit, squarely only focus on immuno-oncology. I know this as a little bit my backyard. Definitely, there's a lot of excitement happen in the past, I would say 10 years in immuno-oncology, like the miracle drug, people call it Jim Carter drug, right? The Keytruda cured like a
Yep.
former President Jim Carter, right? He had a late-stage melanoma. Everyone know about that. So the peak sale of this drug, the sale of this drug this year could exceed 20 billion US dollars, by the way.
$20 billion.
Yeah, so they are very likely gonna become the best-selling drug ever in human history, but they're probably gonna outsell it in the future. But they're very likely gonna kick off Humira from the top one spot in the near future, 1 or 2 years from now. And you also heard about CAR T, right? Like Emily Whitehead, a cute little girl, had a really horrible leukemia on the kind of only have 1 or 2 months to live and have one shot of a CAR T, and miraculously she was cured, and she's a pretty happy, like a young woman now. Yes, all those are great stories. So immuno-oncology definitely sure. Actually, at some point, immuno-oncology has the just PD-1 by itself. I think have like several thousand clinical trials. It's amazing.
Wow.
But there's a big but. There's a Keytruda, a little known to a lot of people. That's in biotech drug business talk about target, right? So target is that the target want to hit. You have a different way to hit it, but more or less that's a biology, right? They pretty much work the same. Doesn't matter what kind of a drug from which company. So for PD-1, that's a target for Keytruda. That one target right now, if you including all the drug approved in China, in the world, I think it's approaching 20 PD-1 approved for this one target. So the
Wow.
competition is furious. It's
Yeah, it's kind of a
furious.
feeding frenzy on one thing. That's the way people
Exactly.
work. They go after one little thing, and then there's too many of them, and there's,
Yeah,
maybe only space for a handful at the end of the day.
correct. So guess what? The number of CAR T right now even bigger. It's crazy how many companies are doing CAR T. I think the PR, the mainstream media did a too good a job. A lot of people hadn't do a proper, analysis, just jump into this after read the New York Times, after read the Wall Street Journal, after read the Guardian, read like a China Daily, you name it. Because everyone's talking about this. Immuno-oncology going to change the world. Yes, they are. But how big your slice going to be as a company? This is a very important question to ask yourself,
Yeah.
right? I mean, as an investor, you should always be aware of your competition. If you're first in class, you're number one, always ahead of everyone, go ahead. There's a blue ocean for you. However, if you are number 100, this is a shrinking Red Sea. You're gonna be like the tadpole, get dry, get eaten by other ones. That's what's gonna happen, especially for CAR T right now. That's an unfortunate situation. So that's about IO.
Yep, exactly. The analogy that I use just on that point quickly, I've said this before on this show, but it reminds me of the U.S. car industry. In the 1920s, there were many hundreds of car companies. And I think in the total history of the U.S. car industry, there have been more than 2,000 car companies.
Mm-hmm.
And now, how many do we have? Just a couple. Or in the
Correct.
1990s, the late 1990s, there were hundreds and hundreds of e-commerce platforms. Now
Mm-hmm.
there's Amazon and, kind of
Yeah,
eBay,
exactly.
right? So
Exactly.
all those things, there's only a couple of winners.
Yeah, biotech is exactly like this. Biotech, every new, I would say people call them vertical or new target in the end, because it's very easy to calculate. I'll give you people a little bit, basic idea. So based on the size of the potential market, by the way, biotech for drug business is not a free market. It's a totally monopolistic market. You got it, you can price, especially in the US, you got it, get FDA approval, you name your price. CMS and the private insurance company typically cannot do anything about it. Right. So that's in the US. So that's why it's so lucrative. And however, because of the development cost per drug, like James rightly pointed out, like 2 billion or 3 billion, you name it, per drug, the market size really dictate how many players they can fit in the end. Theoretically, you can price your drug as much as you can, but you cannot price $10 million per shot. That's ridiculous, right? No one gonna take this. So that means let's say if you have a market peak sales like 1 billion per year, if you have a 10 player, guess what? None of them gonna lose money, even they get a drug approved. So people like big pharma won't do this. If they say this market even like a 2 billion, 3 billion, they have a number, how many they can fit. They saw, let's say three, or they know three gonna get in there, they will not be the fourth. That's it. So all the biotech who are doing like other, like I said, PD-1. At some point that there were 150 PD-1 in development in the world. What are people thinking? I have no idea. Have you thought about how could you fit this market? Even let's say the peak market for PD-1 can be 50 billion. Wow, you think it's a lot of money, but divided by 150, that's very little
Yeah,
money.
not that much money. Yeah,
Yeah,
exactly.
yeah.
Yeah, I'm thinking if we title this, it could be, the dark side of biotech or something like that. And I'm glad we're having this dark side of biotech
Mm.
discussion because, as you pointed out, it's easy, especially for a generalist investor, to read headlines, to talk to their doctor, to find out about all
Mm-hmm.
these new exciting things, to see how
Yeah.
much money, governments are
Mm.
spending and countries are spending on healthcare. That's all true. It's all great. There's a lot of money. There's a lot of good technology, a lot
Yeah.
of advancements, but there's a whole lot of companies trying to jump in and take
Correct.
advantage of that. And
Correct.
maybe you're picking the winner, but mathematically, you're probably not. Mathematically, you're picking the one of the many losers and not the
Correct.
one or two companies that are probably going to win.
Yeah.
And I think that's important to keep in mind. And I kept trying to push you, Leon. I kept trying to push you for you know, some discussion or some positive thing for the average person. And I think you correctly kind of resisted that. And you've been talking about the warning signs and the
Mm-hmm.
concerns. And I think that's the right way to think. So people don't take my advice. Don't take my enthusiasm. Listen to Leon on this. He's not recommending going in and buying individual biotech companies unless you are a deep specialist yourself. And if you're a deep
Mm-hmm.
specialist, you don't need to be watching this video because you'll know enough. You'll know that already.
Yeah.
If someone, though, Leon says to you, someone says, okay, well, all right, you've persuaded me. I'm not going into biotech, but come on, we got all these baby
Mm-hmm.
boomers retiring.
Mm-hmm.
Healthcare is going up. No country is going to start spending less on healthcare after it spends more, at least not
Mm-hmm.
likely. How can I take advantage of this overall trend? What's your response?
Uh, so actually, this is a fact, right? If you look at the, SP 500 had a different ETF based on sector. There's one called, obviously there's like a big pharma. I forgot it's Excel. One of them forgot about it. But if you just look at different sector performance, this year I think only two sectors has a positive return. Number one is energy, no doubt, because
Yeah,
the Russian invasion of
Russia and
Ukraine.
Ukraine.
I
Yeah.
mean, what do you expect, right? So that's one. Second one is healthcare, actually, especially a drug company. I think they year to end right now they have like a either single digit drop or single digit increase, so pretty stable. And obviously, index ETF really cover all the company. There's a good company, bad company. I mean, the good and bad ones very easy. For healthcare, obviously, look at a big company like Merck, AstraZeneca, or GSK. Those are big companies, right? So actually, in the past 1 and 2 months, there are four companies, big pharma company, U.S. pharma companies. Their stock price increased more than 10%. Some of them
Hmm.
increased almost 20%. And actually, I just listened to this podcast, the weekly podcast. By the way, if you really want to learn a basic about biotech, I highly recommend people to listen to this as a starter. It's called Biotech Hangout every Friday, 3 p.m. Eastern time on Twitter
Eastern
Space,
U.S. time, Biotech
US time.
Hangout. Okay, that's when
Yes,
it
they have a
debuts, right?
replay. You have replay, so you don't need to like stay. If you are in Singapore, you don't need to stay at 3 a.m. in the morning. No need. They have replay. Last week they proposed some very interesting idea. There's like I believe it's called a BAMG, is a new fund. Like the tech have used to have the
Mhm.
fund FAAMG. That's the new kind of a healthcare equivalent of the lead big tech company. So BAMG means B is a BMS, A is Amgen, M is Merck, G is Gilead. So these
Mhm.
four companies right now favored by generalists, not specialists, generalists. Why? They had been ignored or like, kind of pushed to the corner by the specialists for a long time. Why? They do not have a much growth potential. The pipeline is boring, right? They are doing something not very exciting. However, as a drug company, like James rightly pointed out, just like utility company, doesn't matter the economy. People get cancer, get treated, and they send a bill to the government. Government pay for it. That's what happened. So their revenue pretty stable because last 2 years, everyone looking for growth, they were ignored. So they were undervalued, underowned. Now everyone in panic. Growth story is dying, oftentimes already dead. But money need to go somewhere, right? So they go to safe haven. This is really safe. That's why a lot of people go there, boost their stock price. Whether they already reach a peak, I don't know. I just tell you that's a phenomenon. That's probably respond to your James, your question, how we can let's say capture this, the growth. Something like this is a little bit boring, but they really have a very little vitality. If you
Nothing
enter at the
wrong with
right point.
boring if it makes money. Boring is totally okay. If it's
Yeah,
and for someone new, like if you have no idea what we're talking about, I mean, there's small biotechs, and then there's these big pharma companies. So it's kind of like comparing a tennis ball to the planet Jupiter, right? These
correct.
companies are way, way bigger. It's nowhere near the same thing. So this is a lot more stable. He's basically saying, go this way. Avoid the tennis ball or be very careful with the tennis ball.
Correct. Correct.
And I think that's very good advice. So
Yeah.
I was about to put an order on some biotech stocks, I think, but after talking to you, Leon, I think I'm going to just calm down a little bit and
Just
maybe
do
not
more
buy any.
research. More research
Yeah,
always better. That's
more
why
research
we
always
are
helps.
analysts. I used to be analyst. That's very
Don't
important
just
actually.
buy because the price went down. That's not enough of a
No, no,
reason.
no, no. That's
Very
not
good
a
advice.
yeah.
So Leon Juntong, thank you very much
Mm-hmm.
from In Science We Trust Consulting. Thanks for taking the time to
Mm-hmm.
share your insights with us. And as always, thanks to you guys for watching at home.
Yeah, thank you, everyone. Thank you, James. My pleasure to talk to you.
Hi there. I'm Brian Christopher. My team and I write the Follow the Money investment newsletter published by South Bank Research. In these videos, I try to give you some ideas to think about, names to add to your wish list, examples of shares that you may want to consider for the future. And today, I want to walk you through a bit of my process. I just caught wind of a company with significant insider buying, so I want to take you through some of my next steps. First, I want to make sure you know we aren't just creating these videos because I like to hear myself talk. No, we're here for you. It takes a decent amount of work to put these videos together, so we want them to be a solid use of your time. Of course, what you do with these is up to you, but in the video that we published on 26 October, we mentioned British grocery automation company Ocado Group. That's ticker OCDO on the LSE. We noted there was some outsized insider buying in shares of the company, huge buying. We told you that shares had already risen 20% in the days leading up to the video. But I also said, if you like to trade quick moves, there could be more to this one. Shares are up more than 35% since then. Now, we're not providing official recommendations in these videos. That's for our letters. And we haven't done a full analysis of most of the names that we present. We're adding some of these names to our wish list as well. But sometimes I'll pipe up a bit, like I mentioned that shares could rise further in the short term. Again, what you do with this information is up to you. Just know that we care. So back to this week. Check out the insider buying at cybersecurity firm Varonis Systems. That's ticker VRNS on the NASDAQ. Since shares began trading in February 2014, you can see there hasn't been much insider buying. Lots of selling, but not so much buying. But when insiders bought in the past, they often did well. We could say the worst recent buy was Avraham Kess's purchase on 9 May of this year, though I believe this is still a trade in process. The fact that he and 3 of his colleagues bought more than 97,000 shares in the past few days suggests this trade still has some legs. On 9 May, Kess bought 2,400 shares of VRNS for $29.95 each. Now, Kess is also the vice chairman of the Travelers Insurance Companies in Manhattan. He's a sophisticated business person. He saw value even while shares were at $30 each. Then Varonis reported earnings after the close on 31 October. The market didn't like them, and shares fell 35% the next day, from $26.77 to $17.27 per share. They sauntered a bit lower even over the next 4 trading days. Then the market got word that more insiders were reaching into their own pockets to buy shares, including Kess and 3 officers. These insiders apparently don't agree with the violent market reaction to the company's earnings release. So at this point, we want to try to determine who's right. Is the market right, or are the insiders? Believe it or not, both can be. The market saw third quarter adjusted earnings per share that were flat year over year, and it wanted a better forecast, so it sold. But the market sell-off was severe, even though sales are up and so is free cash flow. And if the analyst estimates are to be believed, next year's third quarter should generate nearly break-even free cash flow. Now, does this growth warrant its current $2.1 billion valuation? I don't know yet. That's one of the things we have to dig into. It certainly may not warrant the $6.5 billion valuation we saw at the end of the third quarter of 2021, that's for sure. But is the company making progress? Numbers-wise, yes. Is the valuation appropriate? Analysts still have a more than $28 price target on the shares. To be clear, analysts can be slow to cut their price targets, but their reports are useful to review. They often have solid insights on the goings-on at companies. Among other things we'll need to do to assess this name, review the press release, the earnings release, and the earnings call. What does management say? What were the biggest misses this quarter? Will they be fixed? What's the company's outlook? Did management avoid any questions from analysts? If so, why? Are they material to operations? How does the company stack up to its competitors? Is it a leader in its industry? If it's a lot cheaper than its peers, why? If it's as good as them, it should trade at the same levels of them. Does it pay a dividend? Is it rising? Has it been buying back shares for less than the current price? Can it support its debt levels? This is important, especially today. And how much of its debt is fixed rate versus variable rate? The more variable debt it has in a rising rate environment, the worse it is, the more costly it is, etc. Now, Varonis isn't the only example of a company that was hit hard after earnings. We see several of them every season. Other examples of recent earnings misses that have been followed by insider buying include Lumen Technologies, ticker LUMN on the NASDAQ. Now, Lumen has been transitioning for a while. It continues to sell non-core assets and pay down debt. It also just cut its dividend to zero. And although it generates a lot of free cash flow, it still has a lot of debt too. People have been avoiding this name for a while, and its insiders haven't always bought back shares at opportune times, though to their credit, in the past, the company paid a large dividend that they profited from. Insiders bought 31,400 shares on 4 November. I'd like to see more. Insiders, show us you believe. Otherwise, why should we believe you when your charts are weak? Payment processor Global Payments, ticker GPN on the New York Stock Exchange, fell 25% from 28 October to 3 November. The company is profitable and generates positive free cash flow, though it has been falling a bit. An insider just bought $500,000 worth of shares on 4 November, and shares are rising a bit as a result. Now, the valuation has also pulled back more than 50% from last year, as you can see here. This name is worth more digging. An online video platform, Brightcove, ticker BCOV on the NASDAQ. Even though it beat sales and earnings estimates, its forecast was underwhelming. Yet, New York-based investment firm Edenbrook Capital has been buying shares since August of last year. The chart looks rough. Brightcove is trading near $5.50 as I record this. It peaked at $24.77 in February 2021. Now, Edenbrook runs a concentrated portfolio of small cap stocks. It either knows something no one else does or is just wrong. If it knows something, we want to find out what it is, especially at these prices. So that's all for today. I hope this helps as you consider your own investment process. Thank you for watching.